I say, why? You do what you do. You can't pick a side. I say, why? You gon' leave me, boo, when I did you right. I say, fine. When he do you wrong, don't call me in the night. I say, God, oh God, help me find a light. Don't want no minimum wage. What's up with y'all, man? We back with another episode. Today is gonna be exciting because I got some stuff I want to talk about. I got some stuff I want to show y'all. The song I was just singing, I was actually just mixing it, so it was stuck in my head. I just got done with a little mixing session right now, so that song was stuck in my head. Just show you a little preview. I'm gonna drop it soon. I think you're gonna like it. Hopefully you enjoy it. But this episode, I'm gonna show you how to set up an account so you could get started investing into the market. And I'm gonna also go over like some common misconceptions that people usually have confused, or some common misconceptions they have about getting started investing into the market. So just in case you had any doubts, any worries, hopefully after this episode, you don't have those doubts and worries no more, and you could get started investing. So without further ado, let me begin. I'm gonna just share my screen real quick. And then also I got a little surprise at the end for you. So if you want to watch the whole thing, I would advise that, because it's gonna be a little surprise at the end. So let me show you this real quick. Let me share my screen. Loki just gave the surprise away. Let me see what I wanted to show you real quick. Get little things out the way. All right. So when you're first starting investing, there's different types of brokers that you can go through. There's tons of them out there. It all depends on which broker is best for you. So me personally, I look for the ones that's easy to use, they're accessible. If I have a problem, I can contact them without any issues. I also want them to give me some good info in terms of research, in terms of articles that I can read that will give me good insights and good information on what's going on in the market. So me personally, I use TD Ameritrade. Now, just because I like TD Ameritrade doesn't mean that you have to go and open up an account with TD Ameritrade. There's different ones you can use. There's Robinhood, there's Fidelity, there's Webull, there's a whole bunch that you can use. So just make sure that you go and do your research, and whichever one is best for you, that's the one that you're gonna do. We're gonna go over the different types of accounts that you can set up as well. But let's just say for this example that you wanted to use TD Ameritrade, and I'm only using them as an example because I use them personally. I'm not sponsored by TD Ameritrade. They don't give me no type of money for this advertising. So I'm just showing you because this is the example I'm going to use. Again, you have Robinhood, which is very easy to use for a lot of people, especially for beginners. That's why Robinhood is very popular. And then you have like Fidelity, Webull again. So just whatever you want to do, just do your research. And then whatever is best for you, that's the one you're going to choose. But let's just say you go to TD Ameritrade, you're going to type in, you're going to open up the new account. That's what you're going to click. And then here is going to show you the different types of accounts that you could set up. So you have your individual regular brokerage account. If you wanted to open up an account with somebody else, like a wife or something, or a partner that you have, you could do joint tenants account. And then here you have the IRAs account. It's up to you to do your own research on these types of accounts. I'm gonna just go over quickly the Roth IRA account and the benefits to why it's a little bit better than a brokerage account. So if you wanted to start investing and you open up an account, I have a Roth IRA account. So I have a Roth IRA account and a regular individual account. I have both of those, and I'm gonna tell you why. So when you open up a Roth IRA account, the first thing that you need to note is that you're only allowed to contribute up to $6,000 per year. So that basically means if you wanted to invest $10,000 into your account right away, you only can invest $6,000 of that $10,000 into the Roth IRA account. The other $4,000, you would have to open up another account, like a traditional IRA or individual account. So that's one of the things that you need to note when you're opening up a Roth IRA account. The benefits to the Roth IRA account, though, is it's not going to be taxed on growth. So your account is allowed to grow and grow and grow, and you're not going to see any penalties when it comes to the tax season, unless you take out your profits before you reach the age of 55. So it's basically like a retirement account that you're setting up. And again, it's up to you to do your own research. I'm just briefly going over it with you just so you can know the benefits of each one. So let's say you opened up an individual brokerage account instead of the Roth IRA. The more that your account grows, the more that you profit from your investments. You will probably see some of that during tax season, just because that is considered like income. Is considered some may be considered short-term investments, some may can be considered long-term investments, but that's the type of benefits that you have to each one. But there is again, there's benefits to each one of these. I'm not a financial advisor, so I'm not going to go over those in depth, but it's up to you to do your own research. Again, me personally, I have a regular individual account. That account is more for like more of my short-term leisurely life. So any profits that I get from that account, I may use some of those profits towards my life right now. Like if I wanted to take some out and treat myself to dinner or something like that, then that's probably what I'll do. But the Roth IRA account that I have set up, I'm not taking out any of that money until I reach the age of 55. So that account is just going to keep growing and growing and growing until I reach the age of 55. And even after that, I'm going to just keep letting it sit, keep letting it grow, and take out money whenever I feel like it. So those are different types of accounts that you could set up. And again, when you're looking for different brokers, a thing to also keep in mind is the brokerage fees. So every broker has to collect fees some way, or else they wouldn't be able to make money. They wouldn't be able to help you. They wouldn't be able to be there to serve you. So you can look up this information. This is TD Ameritrade's pricing. So it'll show you like the brokerage fees that they have for stocks. Right, online is $0. If you wanted a broker assisted transaction, it's going to be $25. Me personally, I trade options, so the options is what I was really worried about. If you look on the options tab right here, right here is 65 cents per contract. So if you want, you can compare different brokerages. I'm not going to do all the research for you, but I did pull up Fidelity's brokerage fees. So even there is a $65 per contract on options as well. So this is something that you should also keep in mind to see just how much these brokers are getting from your trades, from your investments. Just to keep in mind, if you wanted to go with the lowest fees, ease of use, accessibility, it's all going to be what you prefer. So just because, again, I use TD Ameritrade does not mean that you should go and use TD Ameritrade. Just do what's best for you. I'm just showing you the different types of brokerages and the different types of accounts you can set up just so you can get started investing. Now, a common misconception that people have is that you need $1,000, $1 million, a lot of capital to get started investing, which is not true. That's not true at all. So let's say you open up your account, right? And let's say you want to invest every time you get paid from your job. Let's say your job only pays you once a month. So let's say you invest $100 a month, right? Just because you transferred that $100 from your bank account to your investing account, that does not mean that you have to buy an investment right away. Cash is also an asset that's good to hold in your investing account. So if you go 6 months, but just merely putting cash into your accounts, $100 every month, and then after 6 months you have $600 cash just sitting there, that's fine. Like you can still take that cash out if you wanted to, and you don't have to buy an investment right away. You can go and just keep doing research, keep watching the market before you even want to put your money into investment. That's totally fine. You can move at your own pace. Nobody's rushing you. You don't have to buy something just because you feel like people are rushing you. That's not true at all. Another thing is you don't need a lot of capital to start. Like I know for a minute, I don't know if they still do it, but Robinhood was doing partial shares. So let's say if Tesla costs $650 per share and you only wanted to put in $5, I don't know if they still do it, but I know for a time you could buy a partial share of Tesla and just put that $5 in and own bits and pieces of Tesla, which I don't know if they still do it, but you can put in as much as you want. Like if you want to start off with $5, $10, you can go buy Bitcoin, a part of Ethereum, a part of Cardano, just with those $5 or $10 and get started investing. So it doesn't really matter how much you start with. It's just merely getting started. That's the whole point. Just get started. It's to get your feet wet and just see how the market is. You can look at the different types of stocks that move, like the main ones that really move the market, like Amazon, Apple, Facebook, Google. Those are the ones that really move the market. Again, you have your small cap stocks as well, but those are the big major players that move the market. So even if you wanted to just transfer your cash and have it sitting in your investing account, that's totally fine. That's totally fine. Just get the account set up, get it open, and just get your feet wet, and you can see what the stock market is about. And another thing that I want to point out is where you should get your research and a lot of the articles, or if you wanted to read, like if you wanted to subscribe to newspapers, all that is totally fine. I personally recommend just stay away from the opinionated articles, the opinionated newspapers, because a lot of the media outlets, they will try to scare you. The headlines that they show you will be hella over dramatic, like the stock market is plummeting today. Why it may plummet over the next 3 months, and then it'll start trying to form your opinion, like, oh, maybe I should sell my stocks, maybe I should do this just because this newspaper said that the market might drop the next 3 months. I'm telling you right now, when you get started, it's going to be overwhelming if you let all of that noise get to your head. Just stay calm, make sure you meditate, make sure you take it at your own pace, and just stay away from those opinionated articles, and don't listen to all that noise. Like, it's going to be very important that you form your own opinion based off of the research that you do. Do not have like form opinions solely based on one article that you read. Don't just subscribe to like one newspaper, because you want multiple perspectives when it comes to your research. You don't want to just get one biased perspective on why they think Apple is the best company. It's also important to know, like, okay, why do I not want to invest my money into Apple? Why do I not want to do this? Why do I not want to do that? Stock market, they saying that it might drop, but for the past 3 weeks, it's been going up. So what do they keep feeding me? Like, a lot of these motives behind some of these media outlets, it might be to get you to sell some of your stocks, and may get you to buy some. Like, you never know. So just stay away from those opinionated ones and do what you feel best. So I know for me, like personally, I have a subscription to Apple News. So I usually get articles from like Barron's, Investors Business Daily, a little bit from Wall Street. But again, some people don't like Wall Street. Some people don't like Investors Business Daily. I really like Seeking Alpha. Seeking Alpha is really good. Seeking Alpha, I really like. Barron's, I like. Investors Business Daily, I like. And Wall Street Journal is kind of iffy with me. Sometimes I like them, sometimes I don't. But again, it's all up to your personal preference. Don't let my opinion influence yours. Like, just do what's best for you. Have your own brain. That's the most important thing, in my opinion, when you first getting started investing. Have your own opinion. Do not let somebody you watch form your opinion for you. Do not let somebody you listen to form your opinion for you. The articles that you read, do not let them form your opinion for you. Have your own opinion, have your own thesis, have your own theory. Invest in what you believe in, and then it'll work out. It'll work out. Like, it's a lot of information to take in at once, but I'm here to help you take it day by day. Just go at your own pace. It's no rush. The stock market is always going to be here. These companies are always going to be here. Money is always going to be flowing into market. Money is always going to be flowing out the market. So don't think like you're going to miss your shot. You're going to miss your chance. It's always going to be here. Just move at your own pace. It's no rush. It's no rush to learn everything at once. Don't overwhelm yourself and consume all this information at once. Just do what's best for you. So that's the advice that I would give you when you first started investing. Again, I'm not going to do all the research for you. I'm going to just show you like the different brokerages I did. So make sure you look at the brokerage fees, whichever is easy to use, and then choose that broker. And then I'm going to show you the surprise that we had at the end for you. Give me 1 second. So at the end of every stock episode that I do, I'm going to show you the chart of the day, or the stock of the day. So let me show you this real quick. Let me move this out the way real quick. So this is IIPR, Innovative Industrial Property. This is a company that's in the real estate sector, but they are also in the cannabis sector. So they basically lease out properties to cannabis companies for like the development of cannabis, the distribution of cannabis, the growth of cannabis. So like if a company wanted to grow weed, they have to do it on land. And this is the type of company that is buying out the land and leasing it to those type of companies so they can be profitable and stuff like that. So basically, this is a company that I found doing my research. Again, it's IIPR, the symbol, and this is a chart over the 5 years. Mainly for the past year, you can see that a lot of its support came from the 20-day average, the 20-day moving average, or the purple line. Yeah, it has its moments where it drops down. Like for this instance, it's been dropping down, but over the past year or two is what we really worried about to see how it's been moving recently. So this is like June of 2020. And it's just like, as you see the chart, I love charts that's just steady going up. I don't like charts that's kind of iffy. It got highs over here, lows over here, and then it's going back up. Those, some people like them. I personally don't. I like companies that's showing me steady growth. Excuse me. And then And I know that the cannabis sector is something that's not even taken off yet. Now, for me personally, I've looked at some cannabis companies and then even like the cannabis ETFs. Personally, they haven't been profitable, so I haven't really been invested into them. I have them on my watch list, but I don't really think they're going to be profitable anytime soon until more regulations start happening, until they start approving, until they start regulating cannabis and really getting it approved and like statewide and stuff like that. But this company, again, it's a really, really, you can never go wrong with, well, again, I'm not telling you what to invest in, but I believe you can really never go wrong when investing into real estate because it's something that's always going to be there. It's something that's always going to be profitable. And I'm personally looking to get into them because I know that real estate sector plus cannabis sector is something that's going to really, really grow over the years. So I think this company has a lot of growth and they pay a really, really good dividend. If you look here, the last dividend that they paid was $1.56, and it's continually growing. Like it went from $1, it was $1.06 of June 2020, and then now we hear it was $1.56. So this company has been on my watch list. I'm trying to get them around like 216 once they come back down to the moving average, 215.05, 216. But again, I'm not telling you what to invest in. This is just the chart of the day that I wanted to share with you, that I wanted to show you. It's totally up to you what you want to make your investments in. I'm just giving you ideas just so you can start doing some research if you wanted to look. Again, the symbol was IIPR. Again, I've just been looking at them just because I know that the cannabis sector plus the real estate sector is something I wanted to diversify my portfolio into. So far, I'm in like tech, obviously, consumer discretionary. I was in materials for a little bit, but then I closed my position. I do want to get back in specifically the lithium mining ETF. And then I'm also in like, what else am I in? I want to get in the communication sector like Google, Facebook, and stuff. But again, the real estate sector, the cannabis sector is something I wanted to diversify my portfolio to get in. So this is a company that I've been watching. I just wanted to share that with you for the chart of the day. And hopefully this video helped you. If you have any questions, you know where I'm at. I'm hella accessible. You can hit the DMs. If you got my number, you could text me. Just if you have any questions, just know I'm here. So hopefully this episode was very educational. Hopefully you learned something from it. Hopefully all those doubts and worries that you had went away so you could get started investing into the market. Share this with some people if you think that they should get invested into the market if they were having a little bit of trouble. Just know that we're here for you, we're here with you. Subscribe to the channel if you haven't. Like the video if you liked it. And we're going to be here every week. Consistency is key, like I talked about in the last episode. So just know each episode I'm going to have something special for you. So again, hopefully you liked the video. If you had any questions, you know where I'm at.